Well, people who are about to renew their car insurance policies may get a bit of a sticker shock.
Fox 43's Jackie DeTore finds out why auto insurance rates are rising.
Well, the cost of driving remains high, according to the latest CPI report from the Bureau of Labor Statistics. Auto insurance prices remained up by 20.6% from a year ago in February, the largest jump in government data going back to 1985.
Even as U.S. inflation has eased in the last year, an unusual culprit has emerged in recent months as a surprise force in preventing consumer prices from falling even further. And that culprit is auto insurance. Having a car isn't something to flex about anymore because its insurance is getting more and more expensive. In this video, I will discuss why the auto insurance rate is skyrocketing and the possible means you can use to still secure reasonable coverage. According to the Labor Department, consumer prices in December last year rose 3.4% from a year earlier, more than the 3.2% economists polled by Reuters. Listen to CNBC's report on that.
Year over year CPI expected to be up 3.2 is up 3.4, up 3.4. The best it's been was 3.0 in June of last year. That was the best since March of 2021.
One of the catalysts for such is the auto insurance rate, which keeps increasing. According to Bankrate, the average annual premium for full coverage auto insurance in the U.S. rose to $2,543 in 2024, a 26% increase from the previous year. Watch this clip.
According to a Bankrate report, between 2023 and 2024, the average cost of full coverage car insurance jumped 26%.
Surely notice that stupendous increase if you recently paid for car insurance. But mind you, you are not alone. The Consumer Price Index report noted that car insurance prices were up more than 20% over the same time last year. What's particularly painful is that rates were already rising. Overall, car insurance rates have increased more than 38% since January 2020. The big insurance companies have been relatively quiet about what's driving rates up, but we know inflation is a big part of the equation. Everything now costs more, including cars and car repairs, and insurance companies are passing those costs on to consumers. COVID-19 and auto insurance. Listen to this clip.
Why are automobile insurance rates increasing? That is the question being asked by industry insiders who say despite fewer drivers on the road and fewer accident claims during the pandemic, that Ontario drivers are actually paying more for their premiums to the tune of $198 million between December of 2019 and June of this year.
The impact of the coronavirus reverberated across numerous industries, with several sectors still feeling the pang. Due to movement restrictions, auto insurance is one of the sectors that got hit directly. Then, insurance companies gave out refunds because most people had hardly left their homes. According to a Deloitte Center for Financial Service report, lockdowns caused a 40.2% decrease in miles driven year over year. Here is a chart of the total and per capita vehicle miles from 1970 till the COVID era. Many auto insurance companies in the United States started giving refunds and discounts to auto insurance customers, as said in this video.
People staying home and driving much less because of the COVID-19 pandemic. Well, car insurance companies are offering discounts and refunds for people.
In the second quarter of 2020 alone, the refunds amounted to 15% to 25% of total premiums. Also, there were fewer claims and fewer compensations. Due to the reduction of vehicles on the roads, car accidents reduced significantly, leading to fewer insurance claims and compensations. However, what occurred during this time was one of the main reasons for the surge in auto insurance rates. We're driving more dangerously. One pivotal reason rates are up is that driving has become much more dangerous during the pandemic. People started engaging in risky behaviors like speeding, using their phones while driving, and much more, which is reported here.
We're actually seeing a higher percentage of car wrecks than before, given the amount of people out on the roads that are distracted, whether it's anxiety, whether they have a loved one that is sick. We're seeing a lot more people get behind the wheel intoxicated, again, probably having to do with the stress of being at home all the time. So even though there's not as much traffic on the road, it's probably more dangerous than normal at this point.
American Automobile Association spokesman Robert Sinclair also said motorists developed bad habits during the lockdowns, contributing to current behavior. For instance, researchers in Nevada discovered that during the pandemic, motorists were speeding more and driving through intersections without seatbelts, and intoxicated driving arrests were up to near historic highs. Ryan McMahon, Senior Vice President of Strategy for Cambridge Mobile Telematics, said the organization has been experiencing an incredible increase in distracted driving since the COVID-19 pandemic. McMahon is not just speculating. CMT has access to driver data from millions of drivers who download apps via their insurance companies that measure things like speeding, hard braking, cell phone use while driving. The huge jump they saw in distracted behaviors during the pandemic hasn't come down since. Sinclair also pointed to National Highway Traffic Safety Administration data, which found that in 2021, at the height of the pandemic, road fatalities increased by 10.5% to their highest level since 2005, even while most Americans stayed home. Let's watch this clip.
The National Highway Traffic Safety Administration has released early estimates indicating that nearly 43,000 people died in motor vehicle crashes just last year. That is over 4,000 more traffic deaths, or a 10.5% increase from 2020.
The NHTSA said it was the highest percentage increase it had ever seen. Costs keep rising. While drivers are getting more dangerous, cars have become more technologically advanced, making car repair more expensive. Think of a car made in 2004 versus a car made in 2024. If the two crashed, the car from 2024 would probably be more expensive to fix because it's more likely to have advanced technology like backup cameras and lane sensors. According to an industry analyst CCC report, the average estimate for a front-end claim in 2022 was $3,706, up more than 15% over the year before. Meanwhile, vehicles over 7 years old cost over $1,000 less to repair. This cost also depends on the car type. In 2022, EV required 2 full weeks of additional cycle time and nearly 8 more days between the last estimate being sent and the vehicle going into the shop to begin repairs. Once the EV was in the shop, it required an average of 5.8 more days to complete the repairs. What's driving the surge in car insurance prices? In addition to inflation, other factors beyond a driver's control, such as weather and population density, play a large role in the price of their insurance. For this reason, car insurance rates are greatly affected by where a person lives. Auto insurance costs throughout the country continue to climb as natural disasters have become a greater threat to drivers and vehicles prove more costly to repair and replace. That said, the states where the true cost of car insurance appears to be highest are those frequently slammed by natural disasters such as tornadoes and hurricanes. What these disasters cost the nation is said in this next clip.
3 months remaining this year, and already we have set a record for natural disasters. If you can believe that, there have been 23 catastrophic events across the country.
In Louisiana and Florida, for example, where severe weather events have become increasingly common over the past several years, drivers are forking the largest share of their paychecks toward their car insurance compared to drivers in any other state. According to Bankrit, auto insurance premiums take the smallest bite out of household incomes for drivers in Massachusetts, where state law prohibits using age as a rating factor for setting premiums. Customers pay just 1.76% of their income to maintain their vehicles. Missouri saw the largest increase in insurance premium prices this year, with drivers spending an average of $2,801 per year on auto insurance in 2024. A hopping 40% more than what they shelled out for coverage last year. Drivers in one state saw premiums drop this year. The cost of insuring a vehicle in Wyoming fell $1 from 2023 to 2024, resting at $1,581 a year. Still, the cost of auto insurance will continue to rise throughout the country as extreme weather, poor driving habits, and high repair costs continue to impact rates. That's not all. More drivers on the road means more accidents. As driving increases, so does the chance of car accidents, and the odds that insurance companies will have to fork over more payouts. The National Safety Council reports that the number of miles driven in May 2023 increased by 2.5% compared to May 2022. Annual mileage is 30% higher than in 2020, when the country was largely locked down due to COVID. In 2022, drivers hit and killed more than 7,500 pedestrians, the most since 1981. This frequency and severity of accidents led to higher payouts by insurance companies. This trend has compelled insurers to adjust their premium rates to maintain their financial stability and ability to fulfill claims. Insurance tech firm Insurify found that auto insurance premium hikes were largely due to the skyrocketing price of auto parts and the increasing number and severity of claims. Those reasons I've mentioned aren't the only cause of the rise. Car theft, which zooms by double digits, is also part of it. According to the Council on Criminal Justice Statistics, car thieves are out in big numbers. Motor vehicle thefts jumped by an eye-popping 34% during the first half of 2023 compared to the same period in 2022. We are currently in an environment where all insurers have aggressively increased premiums. That led to a situation where the insurer was out shopping for auto insurance and could not find an insurer with a lower premium. Why will premiums keep rising? Severity and bodily injury claims are on the rise, while inflation has made vehicles, parts, and equipment prices, and the cost of repair expensive despite being stabilized a bit. Every major car ownership expense except gas is dramatically more expensive than just 3 years ago, including used and new cars and trucks. One of those companies who felt the effect of rising severity claims is Geico. The second largest auto insurer in America, behind only State Farm, was hit by 6 consecutive quarters of underwriting losses beginning at the height of the pandemic. The company has since responded with more aggressive policy writing, trimmed marketing budgets, and higher premiums. When does it end? The price of new cars has grown so much that they're practically unaffordable for middle-class consumers now, and these rising costs hit low-income people even harder. It's particularly difficult because for many, a car is often an essential means of keeping a good job. Americans are now stuck at a crossroads. They can't live with the rising costs of car ownership, but can't live without them either. And their rates are already likely to be higher if they have poor credit or live in a high-crime neighborhood. The panacea. Even though rates rise, you don't have to break the bank to pay your premiums. How are you going to do that? I'll be sharing some valid tips on that right now. Shop around. You'll need to shop around if you're looking for competitive insurance rates. Consider getting auto insurance quotes from national auto insurance companies like Geico, Allstate, and smaller insurers, since you never know where the best deals could be hiding. One of the simplest ways to shop around for insurance coverage is to compare auto insurers online. If you prefer to review insurance options with someone, working with a car insurance agent is another way. Also, understand the factors that affect insurance premiums. It's not just your driving record that determines the insurance quotes you get. Insurers base the insurance cost on the risk they're taking by insuring you. They use claims data and personal information, among other factors, to assess this risk. In some states, your credit can have some influence on your premium. While it's somewhat controversial, using credit-based insurance scores to influence premium cost is still a reality, with studies and surveys suggesting that those with less than ideal credit are more likely to make insurance claims and vice versa. The next thing you should focus on is bundling home and auto insurance. If you already have homeowners or renters insurance, you can save by getting your car insurance from the same provider. Bundling home and auto insurance can help you save on your premiums. You can pay your annual premium upfront. Many insurers charge a fee for dividing your premium into monthly payments. Paying it all upfront could save you as much as 12%. A high-yield savings account could help you save enough to cover the bill and earn some interest in the process. If paying your yearly premium all at once isn't feasible, consider whether your insurer has a discount for going paperless or enrolling in automatic payments. For example, Geico customers who set up AutoPay can save up to $36 a year. Good options you can check out are pay-per-mile insurance. A pay-per-mile policy could be a good fit if you work remotely or don't drive often. This type of insurance charges you a flat daily rate with an added per-mile surcharge. There is a trade-off in privacy since most pay-per-mile programs require drivers to attach a device that tracks their vehicle's mileage, speed, acceleration, and braking distance. The last one is maintaining good credit. In most states, your credit score affects your car insurance price. Only California, Hawaii, Massachusetts, and Michigan prohibit insurers from linking your credit to your premiums. Whether you agree with the practice or not, you should be aware that drivers with better credit may get better rates in certain states than those with less great credit. How does the auto insurance rate right now affect you? Let me know your point of view in the comments section. Don't forget to like, share, and subscribe to my channel for more insightful content. See you on the next one.